Hey guys, welcome back to RWM Finance. So today I wanted to talk with y'all about the types of stocks you can buy. You might just think that all stocks are the same, but there are some major differences between some of them. Each stock is different, and the types of stocks that you buy and the amount of those stocks that you do buy will all vary depending on each individual. Some people have low risk tolerances, which means that they want to invest in something safe, that way they don't lose their money. While some want greater returns, so they are willing to risk it for the biscuit, so to say, in order to get better returns. Now, risk tolerance isn't the only thing that will determine what stocks people buy, but I will save all that for a different video. As for now, if you haven't subscribed, please scroll down and click that subscribe button for me, and we're just going to keep going. Now, let's get to those types of stocks. Our first type of stock that you can buy is blue chip stocks. These are stocks that are high quality and well established. So what makes a blue chip stock? Well, blue chip stocks have proven that they are good investments in good times and in bad times. And the stocks have a history of solid performance. Here are some characteristics that many blue chip stocks have in common. Number one is they have a large market capitalization. This is a measure of the value and size of a company. Typically, blue chip stocks are large cap stocks, meaning that they have a market valuation of 10 billion or more. Second, they have growth history. Blue chips have a solid history of growth and good future prospects. Now, they might not be flashy and fast growing, but that is due to the fact that they have already been established. Third, they are a component of a market index. Typically, blue chip stocks are in major market indexes like the S&P 500, the Dow Jones Industrial Average, or the NASDAQ 100. Lastly, number four, they often pay dividends. Not all, but many do pay dividends, and companies that pay dividends usually mean that they are more mature. So after doing some research, I have come up with some blue chip stocks that y'all probably use or purchase from or use the services of every single day. Johnson & Johnson, Facebook, McDonald's, Dollar General Corp, ExxonMobil, and Amazon. Our next stock type is growth stocks. These are stocks that are rapidly growing. Growth stocks are companies that are expected to grow sales and earnings at faster rates than market averages. They often look expensive because they are trading at a high P to E ratio, which is price to earnings ratio. However, these valuations could actually turn out to be cheap if the company were to continue on its pace with the rapid growth rate, causing the share price to climb. Due to investors paying such high prices for these growth stocks due to the expectations, if those expectations are not met, then these stocks will oftentimes fall faster than they even rose. Another thing is that growth stocks oftentimes don't pay out dividends because they reinvest all their profits back into growing. So after doing some research, I have compiled a list of growth stocks as well. Amazon, Facebook, Alphabet, Google, Microsoft, and Netflix. Our next type of stocks that we have are cyclical stocks. These are stocks that follow the cycle of an economy. Cyclical stocks are affected by macroeconomic changes where the stock's returns follows the cycles of an economy. They are generally the opposite of defensive stocks. They include discretionary companies like Starbucks and Nike, while defensive stocks are staples such as Campbell's Soups. Cyclical stocks usually have higher volatility and are expected to produce higher returns during periods of economic strength. Companies with cyclical stocks include car manufacturers, airlines, clothing stores, and hotels. When the economy is doing good, people can afford these purchases. When the economy is doing poorly, these discretionary expenses are usually the first ones that consumers cut. Like the other list, after doing some research, I have come up with a list of cyclical stocks for y'all to look at. MGM Resorts International, Nordstrom Inc., Carnival Corp., Domino's Pizza Incorporated, and the Home Depot Incorporated. Now, our next type of stock that you could buy are penny stocks. These are stocks with a price below $5 per share. Now, some penny stocks are traded on large exchanges like the New York Stock Exchange. However, most penny stocks are traded over the counter through the OTC bulletin board. As with any investment, there can be significant gains and losses. But while there can be sizable gains trading penny stocks, there are also equal risks of losing a significant amount of an investment in a short period of time. Penny stocks usually trade infrequently, meaning that they have a lack of liquidity or ready buyers in the marketplace. Due to their lack of liquidity, penny stocks are oftentimes considered highly speculative, which means that investors could lose a significant amount or all of their investment. Remember what Benjamin Graham said.
Investors make money for themselves, while speculators make money for their brokers.
Moral of the story is to be an investor and not a speculator. But I have also compiled a list of penny stocks for y'all to look at, so here it comes.
IZEA Worldwide, Inuvo Inc., Genius Brands International, and Stonemore.
Our next stock type that we have are dividend stocks. These are stocks that pay their shareholders for owning them. I actually have a whole video dedicated to dividend paying stocks, but I will go over them with y'all a little bit. So a dividend is the distribution of a portion of a company's earnings, which is decided and managed by the company's board of directors, and then paid to a class of shareholders. Dividends are payments made by a publicly listed company as a reward to investors for putting their money into the company. Now, sometimes instead of paying out cash dividends, companies will pay out stock dividends. Stock dividends are paid to shareholders in the form of extra shares. So here's a list of dividend-paying stocks.
ExxonMobil, Coca-Cola, Johnson & Johnson, Procter & Gamble, McDonald's, and Walmart.
For our final type of stock, we have defensive stocks. These are stocks that are strong in any environment. These stocks are a lot like blue chip stocks in the fact that they perform well in any environment. Defensive stocks are stocks that provide consistent dividends and stable earnings regardless of the state of the market. Defensive stocks offer the substantial benefit of long-term gains with lower risks than other stocks. On the downside, the low volatility of defensive stocks often leads to smaller gains during bull markets. With defensive stocks, there is a constant demand for their products and services, which causes them to be more stable during various times in the business cycle. So here's a list of defensive stocks for y'all.
Procter & Gamble, Johnson & Johnson, Philip Morris International, Coca-Cola, and Dollar General Corp.
Now, I'm not trying to tell y'all to go out and buy these stocks that I have provided. I am just trying to present y'all with some information over these different types of stocks. And there is much more out there than what I have just presented y'all. But out of the stocks that I have showed y'all, I would personally look into investing in the companies that are on multiple lists. I would pay attention to the blue chip, growth, defensive, and dividend list of stocks, and the companies that appear on multiple lists. Johnson & Johnson, Facebook, McDonald's, Dollar General Corp, ExxonMobil, Amazon, Coca-Cola Co., and Procter & Gamble. These are companies that meet multiple requirements to be classified as different types of stocks. To me, this, among other things, proves to me that these companies are good investments and should be in your portfolio in some way, shape, or form. As I said earlier, I am not trying to force you to go out and buy these stocks. They are just information that I am presenting to you. As always, make sure to do your homework on any investment that you're thinking about getting into, not just with stocks. Well, those are some stocks that you could buy, so get out there and get after it. Well guys, I hope you enjoyed the video. If you did, scroll down, give it a like, and subscribe to the channel below. Also, if you have any questions, please leave those down in the comment section, and I will personally try and respond to each and every one of y'all. Follow us on Instagram at RWM Finance. Remember to check out the list of books in the description bar below. They are really helpful and there are really some good books. I know that they help me out personally. Another thing to remember is I post videos every Monday, Wednesday, and Friday, so make sure to tune in for the next one. As always, thank y'all for watching, and I will see y'all in the next video.